What's going on, everybody? My name is Zach Hartley and welcome back to another weekly watch list video. In this one, I'm going to go through the market conditions and share with you 4 stocks at the top of my watch list going into the week ahead. So let's jump right in. Okay, starting us off here with the NASDAQ. As you can see, we are breaking out of previous levels of resistance. We have even broke out, retested, and then broke out through that level of resistance. So really nice to see here. We are approaching all-time highs in the NASDAQ. And when it comes to the S&P 500, we actually set brand new all-time highs this week, which was very, very nice to see. And the Dow Jones continues to climb higher, setting again higher highs. So altogether, the market is doing extremely well. We're in a very strong position, and the VIX, or the volatility index, is still at a fairly low level, which kind of shows us like, hey, the market right now, as of right now, is doing quite well. Now, when it comes to Bitcoin and cryptocurrency, we had a big day about 2 days ago where we bounced off $40,000 here. We will see if that trend continues and if we can break through a moving average, but only time is going to tell. So far today, not a whole lot has happened. When it comes to West Texas light crude, we are starting to see some very positive signs. We have now broken through our 20-day moving average as well as our 50-day moving average with some very strong green days here, and it looks like we are setting or breaking out of a previous trend and setting a new trend, a new bullish trend. So very good to see. We're going to talk about a couple oil and gas stocks in this video today. When it comes to uranium, I've been watching this one very closely. We traded sideways this week, right around $106 US per pound, still up over 100% from just like 6 to 9 months ago. So uranium prices doing extremely well. Lithium prices still trading basically flat around 95,500. This is super interesting because what happened here is we had a huge rush of demand for electric vehicles, and lithium took a little while to catch up, but a lot of people saw that increase in demand and that increase in lithium price, and they started to produce more and more lithium. And now that we're starting to see a slight slowdown in that acceleration towards electric vehicles, we have so much lithium that people are having to sell it for lower and lower prices to get rid of it, and that is driving the cost down. When that market comes into equilibrium and starts to drive the prices back up, only time will tell. We're just going to have to wait and watch the charts closely. Now, when it comes to earnings this week, we are right dead center in the middle of earnings week or earnings season, and we've got a lot on the go this week. We've got Boeing reporting on Wednesday. We've got Microsoft on Tuesday, and AMD and Google all on Tuesday after the close. And then on Thursday after the close, we've got Apple, Amazon, and Meta. So it is going to be a jam-packed week. So far, it has been fairly volatile. The Netflix earnings went extremely well. Netflix jumped up. Tesla earnings went extremely poorly. Tesla fell by about 12% after earnings. And so it has been fairly volatile so far. When it comes to market conditions, last week the Bank of Canada decided to hold interest rates steady. The United States is going to have to make that same decision this week. Most people are expecting that they're also going to keep rates steady at the current levels. However, one thing to keep in mind is that these high interest rates relative to where we've been at the last 20 years are starting to have some real negative impacts on companies that have a lot of debt or a lot of leverage, as well as anybody that owns a lot of real estate and has leverage on that real estate. So if you have a mortgage for a high amount of that property's value, you're probably going to be starting to feel the pinch here, especially as the fixed rate mortgages are starting to renew right now to those higher rates. And so lots going on, especially in the real estate market and especially in the corporate market if you have a lot of debt. Now this week we also got news that China is ramping up a stimulus package for the stock market and the real estate market to try and spur their economy and keep them out of a recession. It's going to be interesting to see how that one plays out. And like I said, so far it's been sort of a volatile earnings season. One thing that has come up in the market news recently is this Goldilocks zone, where the Federal Reserve is having to increase interest rates, and if they increase it too far, they're going to put the US into a recession, and if they don't do it enough, inflation is going to creep back up. And so there's this Goldilocks zone, and a lot of people are saying that so far the federal bankers are staying in that Goldilocks zone where the economy is doing well and it's not collapsing, but inflation is coming down. So I would say that so far I agree with that. So far the Federal Reserve bankers are doing a very good job, and it's going to be interesting to see how that plays out over the next 6 to 12 months. I think some companies are going to do very well. I think some companies are not going to do very well. And it's just going to come down to who was prepared to be able to manage and afford and deal with these higher interest rates, because some companies did not plan for it and are really feeling the pinch now. Now, like I said, we're going to talk about oil and gas stocks, and the one that I like the most right now is Cenovus. The reason that I like Cenovus is because they have some major support down here at $15. You can see we have bounced off $15 once, twice, 3 times, 4 times, 5 times just recently at the beginning of 2024. I think $15 is a major level of support. I think you can set a stop loss at 14, maybe 14.25. You can get in around $16 and ride it back up to at least 21, and even higher if the price of West Texas light crude continues to increase, especially with all the major events that we have going on around the world. Cenovus also pays a moderate dividend of 2.6%, which is fairly reasonable for a company that is still growing and producing more and more. Next company I like right now is Pinterest. Pinterest is in a long-term bull trend. They continue to consolidate and then break out and consolidate, and now it looks like we are testing a new breakout. So I'm watching this one closely for a push above $38. I want to set a stop loss at maybe 36, 37, and I want to ride this higher. This is a company that got beat down pretty hard over the last 2 years. They had some major highs during COVID. I think they could get back up to those levels, because I personally think the business is doing great. And over the last, if you look at revenue over the trailing 12 months, and then you look back on it, the company revenue is going in one direction and one direction only, and I like that. Third company here is Coursera. I've talked about this company several times. I like the company. I hold a position in Coursera. I hold long-term options actually. So if you want to see that position, when I got in and my analysis, everything's available in my Discord chat. But I like Coursera right now because we are bouncing off support here at $17. We've now got a double bottom right here. We're pushing back up, testing some new highs here. And I think they're going to be reporting earnings soon. I think it's going to be a great quarter. I think the company is on the right path, and I like what they are doing. We're moving back above our moving averages. We're going to be testing previous highs pretty soon, and I like Coursera over the long term. Another company that I think is just going to do amazingly well over the long term is Google. Google was trading at $150, fell all the way down to like $85, and now is back up to $154 and has now set a new all-time high. I think this stock is going to continue to do well. I think it's one that you hold for 5, 10, 15 years, and I think they're probably in one of the best positions to take advantage of AI and cloud computing and quantum computing and all of these different trends that are about to hit the world. Google is one of those companies where they might not be the number one player in everything, but they have an ecosystem that is very attractive and can be built on. And I think that is their strategic advantage. So I like Google over the long term, and I think the stock is going to continue to grow. If you want to learn more about how to analyze these companies, though, I have a totally free course on Skillshare. You get 1 month free access to the entire platform, and it's kind of like Netflix, but for courses. You can take my course. It has over 21,000 students, it has over 400 reviews, and it's over 2.7 million minutes in watch time. Now, like I said, the course is hosted on Skillshare, and there's a link in the description to this video where you'll also find my Discord chat, as well as a couple of ways to get some free money in cryptocurrency and the stock market if you sign up using those links. So definitely check it out, and I will see you in the next video. Thank you for watching. Good luck trading, good luck investing, and we'll talk to you soon.